Welcome to Shet Vidya Mandir online lessons. Let us solve another sum on admission of partner. See, there are two partners given to us, Suresh and Ramesh. They are partners in business, sharing profits and losses. Now, have they given us the profit sharing ratio? No. So that means it is equal. Now see, check the balance sheet. Liabilities, creditors, bills payable, reserve fund, and on the asset side you have building, machinery, furniture, debtors, less RDD, stock, bills receivable, cash at bank. Coming to the adjustment side, they have admitted Kailash on 1st April 2018 as a partner on the following terms. He is getting 30,000 as his capital. And what is his profit share? 1/4 share in future profits. And also he is getting 12,000 goodwill. Okay, and this is going to be withdrawn by the old partners. In the last sum, we saw a sum where goodwill was raised and it was retained in the business. Here the new partner is getting goodwill and it is to be withdrawn by the old partners. Stock and machinery is to be depreciated by 10%. So let's mark our stock and machinery. RDD is to be maintained at 5% of debtors. So let's mark our debtors as well. Building is to be appreciated by 20% and furniture is revalued at 10,000. Mark building and mark furniture. So these will be written in the inner column because they are adjustments. Prepare profit and loss adjustment account, partners capital account and balance sheet of the new firm. So let us prepare the accounts. Here I have prepared revaluation account or profit and loss adjustment account, partners capital account, and also prepared the balance sheet. Okay. Now let's start with the sum. See, start from the asset side first. Building, so where we'll write the building? Balance sheet asset side, right here. Building, and since we have put a mark there, so we'll write in the inner column 30,000. Okay, building is 30,000. After that is machinery. Leave a line right here, machinery, inner column 10,000. After machinery is furniture. Leave a line, write furniture. Furniture is 9,500. Inner column again. After that, write debtors. Debtors also we have put a mark. So we will write down inner column 40,000. RDD we will not write now because there is adjustment. Leave a line, write stock. Again there is adjustment in stock. So write inner column 30,000. Then you have bills receivable. Here there is no adjustment, directly outer column 7,600. Cash at bank. Here they have not told us there is adjustment, but cash at bank there will be adjustment. So we'll just write it now and we'll do it later. Okay. Now going to the liabilities side, let's see capital account where it will go. Partners capital account. Okay. Right here by balance brought down. And what is the amount? 50,000 and 24,000. Okay. After that we have creditors. Is there any adjustment? No adjustment. So directly in the balance sheet, leave space here for capital and write here creditors. What is the amount of creditors? 57,000. Directly outer column, 57,000. After that we have bills payable. Right here in the liability side, bills payable. Directly outer column, 20,000. And we have reserve fund. Reserve fund is to be distributed among the old partners. Go to partners capital account, by reserve fund. Okay. Have they given us any profit sharing ratio? No. Okay. So we'll write profit sharing ratio as 2:1. Okay. Profit sharing ratio is 2:1. So now let us distribute the reserve in that proportion, 6,000 and 3,000, since the reserve fund was 9,000. This much is done. Now they are admitting Kailash. Okay, he is getting 30,000 as his capital. So right here, by bank account, right here 30,000. Okay, and they are saying he is getting 12,000 as goodwill. So now let's see here in rough. He is getting capital. How much he is getting? 12,000. Okay, he is getting 30,000 capital, and he is getting goodwill as 12,000. So what is the accounting entry, journal entry for this? Cash bank account debit to goodwill. Okay, is how much? 12,000. Now what they are telling you here in the sum, see, goodwill will be withdrawn by the old partners. So what is the entry? Goodwill account debit to, who are the old partners? Suresh and Ramesh. What is the profit sharing ratio? 2:1. So write your goodwill account debit 12,000 to Suresh 8,000 and to Ramesh 4,000. Okay, this is your accounting entry. Now they are withdrawing it, that means they want cash. So you will write Suresh account debit 8,000 and Ramesh account debit 4,000 to cash bank. This is your journal entry, 12,000. So how will it reflect here in partners capital account? See, it will be by goodwill. You will write here 8,000 and 4,000. Okay, and then when they are withdrawing the money, you will write here to cash bank 8,000 and 4,000. Okay, cash we will see later. Now stock and machinery is to be depreciated by 10%. Let's go to the balance sheet. Stock less depreciation is how much? 10%. So 3,000. So outer column 27,000. And the second effect, where it will go? To devaluation account to stock 3,000. Next, machinery also is to be depreciated, less depreciation 10%. So 1,000. Outer column 9,000. Second effect, revaluation account to machinery account 1,000. Next is RDD is to be maintained at 5% on debtors. So RDD is 5% of 40,000. So how much is that? 2,000. Now what was the initial RDD? it was 1000. So now RDD has increased, that means your liability has increased. So you will write here on the debit side to RDD account 1000 because the increase is 1000. So write 1000 over here. Building is to be appreciated by 20% and furniture is revalued at 10,000. Add appreciation 20% of 30,000, that is 6,000. So the outer column 36,000. Okay, and furniture is revalued at 10,000. So outer column should be 10,000. So what is the difference? 500. You have to add. So you will write appreciation 500. And the second effect, by building was 6,000 and by furniture was 500. Okay, this is done. Now let's see the cash account, cash bank. See, cash bank, what was the opening balance? It was 33,900. Now how much has Kailash brought by capital? Capital of new partner is 30,000. And how much goodwill is brought? 12,000. And also goodwill is taken away by the old partners, 12,000. So finally what is the amount of cash bank with you? That is 63,900. So your new balance sheet will reflect this figure, 63,900. Okay. So we have finished everything over here. So let's balance the revaluation account. So this side is 6,500 and here your profit on revaluation transferred to Suresh and Ramesh. So what is the profit? 1,500. Now profit sharing ratio we know 2:1. So this Suresh will be 1,000 and Ramesh will be 500. Now second effect, by revaluation account, write here 1,000 and 500. Now we need to balance the partner's capital account. So write here 30,000. This is 65,000 and this is 31,500. Same thing we will write over here. 65,000, 31,500 and 30,000. Now the balancing figure you will write as to balance carried down. This will be as it is, 30,000. This will be 57,000 and this is 27,500. Now these balancing figures have to be carried forward to the balance sheet. So in the liabilities side, write down capital. What are the names? Suresh. Suresh was how much? 57,000. Ramesh is 27,500 and Kailash is 30,000. So outer column, add these three figures, 114,500. Now let us total up our liabilities as well as our assets. So your answer is 1,91,500. Okay. So this is how you do the sum. This sum carries 10 marks in your board exam. Meet you again. Thank you. Take care.